Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So all of you know the market was down as much as 500 points today. There was a lot of people asking what's going on here, how could this happen? You know, I think a lot of people in our community was like, how come it hasn't happened sooner? Obviously there were some strong stocks that have been holding up well in the course of the past few weeks that all gave us sell signals early in the week, but then there were also a lot of weak groups. I would say 80% of the groups were weaker. So we had like 20% of these stocks that we've been able to trade, maneuver. But when you're maneuvering such a small group of stocks, you really have to watch them really close. And that's why we use quick feet. That's why we trust our plans. And that's why we act fast when things change. Because in this market right now, things are changing very, very quick. And I don't care what the media says, what anyone says out there. You can't time the market. You can't trade this market. You can't, you have to hold this market. No, you have to maneuver this market. You can't be in harm's way and be unprotected. You need to know how to protect yourself, and you need to know what to look for. And I do think that everyone in the community, in the chat, has been helping everyone out. And today, there was no one really in distress. There was no one in the chat room saying, I need help, what's going on here? People were moving, maneuvering, doing calculated buys versus the lows, selling rallies against highs, looking to shorting balances, not adding them. Guys are doing what it takes to do to make money. And on a macro level, guys did what they had to do starting on Tuesday in order to get rid of loose positions, because that's what we talked about on Tuesday, selling tier 2 or 3 if you were in there. Also, if you were looking to trade from a swing perspective on that push through failure, you had to get pretty flat, and then especially yesterday when we broke that 1188. So let's first take a quick look at the SPX and take a look at the action here. This bear flag has been, what's been in play for the course of the summer, starting from the lows in August. Obviously, after this whole head and shoulders pattern triggered, that was pattern 1 this year. Here is now pattern 2. We've had a lot of success trading from the low end to the upper end, the low end to the upper end, and that's what's been going on. More recently, about a week or so ago, it tried to break below this rising uptrend. Market wasn't ready. There was still a lot of strength out there, and we did a reversal that led to the move to the upper end, right in front of that 50-day. So you take a closer look, because these patterns repeat themselves, and I want everyone to take notice. Here was that inside day, or not inside day, the outside day, tried to get through this resistance. It couldn't, and then closed on the low. That is a sell signal, especially after a move from the low of 1136 to the high of about 1220. Big move. Loosen up, get rid of some longs, just even take profits. And then obviously we underline this area saying if the market's going to hold in there, it's going to have to hold this upper area to stay in the upper end of this range, not go back to the lower end. So when we cross this area, most people got out. Some people got short, and if you did so, you made money overnight, and then intraday, there was a lot to be said here as far as shorting rallies, buying some dips, and now this pattern, even though we did hold this recent low area, to me, it just looks like it's inevitable that we cascade lower and, we test like 1070 or let's go to the weekly chart so you could see it, or at least try and get down to this area. Now, this is a very wide range bar. It just engulfed. I know that some of them have engulfed each other, but this to me says, if we hang out down here, we're going to break, and this is the area to go with to potentially buy, and we'll see. There were a lot of indicators or groups that follow the rules lower. And there are a lot of people that love to be short out there. I know I tend to be maybe 60-40 from the bull side, or maybe even 65-35. But guys, we're shorting the OAHs, the materials, the industrials, the financials in the last few days because there was no rally there. With the SPX at the top of its range, the OAHs weren't even moving. They were telling you, they were begging you to short them. If you look at the OAHs here, you'll see, first of all, that's the weekly chart, and it already broke this wedge. Look at this. This is leading the market lower. Here's your wide range bar that just engulfed this entire upper level consolidation, which gave you clue 1. Here's your, so if you want to just look on a macro level, here's your pole, here's your flag, and this resolved it right to the downside into support well before the market, showing you that relative weakness also works besides relative strength. And if you look at the daily chart, you will see that this broke this lower wedge, and closed on the dead lows well before the spiders. You look at the spiders here, the spiders, didn't even get to the upper, this rising channel, is still over here where you had the OAHs well through it, almost at the lows, and then that's why the OAHs gave you some nice follow through. So if you made money short there, you deserve it. And now, as far as looking for places for support, it just, who knows? Maybe it needs to go a little sideways, but this paid you if you were looking there. XLF also, we've talked about the weakness in the XLF. This too, we put this little wedge in here in this macro wedge, and pow. It paid you if you were shorting the financials. And a lot of guys got short Goldman yesterday, shorted some such scenarios because they started breaking lower. Look at Goldman, broke lower. If I were trading from a micro level, maybe it broke 100, went down to 90, you cover a little bit, let it work its way, because every time it works lower, a little bit of a rally, works lower, a little bit of a rally. So, play these ranges unless you're just committed to bigger time frames. But Goldman, gave you clues that we were also going to break to the downside, close on the lows. When stocks close on the lows, usually they get follow through. There you go. So I could go into a lot more groups, but which 3 or 4 groups were at the bottom of their ranges that had follow through to the downside even before these diamonds or the SPX broke below and closed below. The strength has been the Qs and retail. So if you look right now at the Qs to show you how even this could have had some limited damage, here is your red dog reversal. Big move from 53, went all the way to the upper end of the range, traded through the high here of 56.91, came back, closing the lows. Sell signal. I'm going over it again because it's going to happen again. Sell signal after a big move. You never know what it's going to deal with, but at least if you get out of the way right here, you save yourself a lot of pain. And now this, group, it broke this rising channel, didn't close on the lows. Who knows? Maybe it tries to fill this gap a little bit or bounces into this curling moving averages. But to me, I think you got to be careful. Apple also gave you a lot of opportunity today from both ways, long and short. It opened up below this 404. And you guys remember, after a move from 370 all the way up here, we said sell some. Why not? I don't care. Once they started saying that this was like your new safe haven in Apple, it gets a little frothy. But meanwhile, it wound up breaking this area, and it closed a little bit off the low. So at least we know now 396.70 is a new point of reference. It's still holding this gap here from 395. And we'll see. This was our other line in the sand. We were talking about this 388 to 392, and we'll see if we could hold here and figure out if we could buy this dip into the moving averages. If you look at the 3-minute chart, there was some action here today, guys. I know for right off the bat, my trade was real quickly. I bought around, I think 402, sold a little bit into like the 406s because I thought that maybe 407 would be some resistance. Then it held higher, okay, and then you had a nice move back up. And look at this, okay, guys. Remember we talk about a shooting star or a outside day. If you just make this as if you were looking at a daily chart, okay, which we're not, we're looking at a 3-minute chart. Right here, it tried to break into the gap, close on this bar on the low. This was your sell signal that maybe this rally from 402 could be done. Just a signal. Doesn't mean it's the end-all, end-all. And then from there, you had a move lower, right, down to about 403. So that's a 5-point move intraday. Rallied up, made a lower high, went even lower, then made another lower high. And PS, it wound up going all the way down to, below the area again. So there was money made both ways in the stock. But ultimately now, on a macro level, I'll be watching this area to trade maybe long against. We'll see. Amazon, shook the tree a little further than normal. It also didn't hold this prior high. It opened up below it. I think I made my morning money buying Amazon, in the beginning of the day, and that was right here, okay? Just to show you how you use 3-minute charts. This is when it went into the gap, and there you go. This is 4 or 5 points. And look at this. This also had a little bit of a reversal right here that led to, a small move lower, and then it just wound up cascading lower. But, here's how you do your 3-minute setup into a gap. It opened up, made new lows, came back up, went sideways, and then you figured they're going to fill a portion of the gap. If you were short, you had a cover. If you were looking for a long, here's your calculated long. Not a huge play, but some cash flow. And now on the daily chart, we'll look to see, what we could do here. Now even on the point of reference, it held this prior. This was a different price point. Here was the old high. Here was the pivot it broke above at around 219. That's what held today. We'll see if it can go sideways, and then we'll see what the next move is. Maybe it tries to fill the gap a bit for cash flow and then rolls over, or maybe it holds here and we'll figure it out. But for now, here's your short-term pivot top, kind of like what you had over here, but look at this move lower. That's why you got to be a little careful. As far as Baidu and Sina, I'm very proud that I don't think anyone was caught in these two stocks. We talked about them, over the course of the past few months, weeks. We trade them actively, and they were the first ones. Thank goodness it happened there, because that gave us a little bit of a heads up that high beta might be in a little trouble. I know it's the Chinese internet stocks in their own little world, but when Sina was down $13, $14, I remember saying on the radio, I'm like, remember last time we had a big correction in tech? Wasn't the Chinese stocks that got hit first? I guess because they're the most speculative. It gave us a clue. Well, it wound up giving us another clue. A, to get out of Baidu because it was in the same group, but B, maybe be a little more conservative. Maybe that's what gave us a heads up to look for some more of those push-through failures to even get out of other things like your Apple, Amazon, Priceline, GMCR, CMG, whatever it was, or even LVS. So if you look here on Sina, look at this macro pattern where it couldn't get through this downtrend. And then right here, this was that last buy around 110. But when these momentum stocks break their uptrends, that is your high-level stop to get out. You should have got out right here, or even if you got out right here, at 101, you saved yourself 20 points. And now it's coming into some support, right around this lower area. So we'll see. Maybe we get a cute little, long. But right now, this is really broken, guys. And that's why you have to be, watching these things close, especially when you're looking at the fastest moving stocks. And that gave us a clue to get out of Baidu. Baidu also, here was that push through failure, couldn't get above this downtrend, couldn't keep the momentum. So then you had to get out of it when it broke this 140. Some guys were, even started shorting it. I talked about shorting it yesterday below 138. Look at this, down to 120. So again, tight pattern. When they get tight, you look to see which way it breaks. Did a fake out to the upside, went to the downside. You always have your rules to follow, and you could have saved yourself a lot of noise. Now we'll see, how it treats, this low here of around 119. But overall, this is really broken, and you're gonna have to just play small bounces, if anything. FCX continued lower, Caterpillar, Deere continued lower. A lot of things just are broken. As far as what else did we go? Gold didn't really give you a good meaty short. It opened below that range, which we all wish we could have traded it through. But if you look here, it opened below it and it broke this recent support. It did. It's trying to hold the 50-day, but I'd be very careful. It is holding versus last recent low of 165.88. I still think it needs more time before we could figure out what the next direction will be. Let's see if it can hold this area before we start to re-enter. If you're still in your macro, long tier 1, you're probably in from either here or you're probably in from here. So, that's your thesis. Stay with it. It doesn't mean the story's over in gold, but for now, you had your shooting star top. This was your reversal, and look what it led to. These outside days, this wasn't quite a drastic outside day, but it tried to get through the high and failed, which is always a short-term sell signal, especially after look where it came from and now look. And we've been talking about how silver has been just a laggard and not even worth your attention. Yeah, there were some cute trades in there. It showed relative weakness, so look what this did. This shows you that, everything just doesn't go together. This was that one macro trade we talked about long ever when it broke through here. And then this wide range bar shook everyone up. And then it's just been like a choppy mess. And now it's right back into this low end of the range. And I just think it's an avoid unless you want to really scalp it short term. But that's fine. So all in all, the market is dangerous. The world is dangerous. Everything is dangerous as you make it out to be. If you try and do brain surgery and you don't know what you're doing, it's pretty dangerous. You try and go play football and quarterback and you don't know what you're doing, and the linebackers come, they can give you a concussion. So, as far as everyone's saying the market's dangerous, it's dangerous if you play above your means or trade above your means or don't follow your set of rules or fall asleep behind the wheel or don't listen to what's going on around you meaning the market, not the headlines, not your friend next to you, not your mom, your aunt, your brother. Don't listen to everyone around you. Listen to the price action and your skill set, and it's not as dangerous. It's dangerous for those who don't understand it. You guys are seasoned professional traders that learn how to embrace volatility, because when there's volatility, that creates opportunity as long as you're not blinded by what's going on. And at this point, I think just watching everyone chatting away on the site, very proud of everyone, even guys on my floor. We had a pretty big day today, as far as a firm. And you didn't see people jumping out of windows here because we learned how to deal with the volatility. Learn how to deal with the volatility and you'll be able to make money in any environment. And listen, I'd love to be in a bull market. I love buying 10, 14, 15 stocks, holding them, playing breakouts, high-fiving everyone happy. But I can't control if we're not in that environment. Right now, what we are in is a very bearish, dangerous tape filled with headlines, with a lot of problems in Washington, a lot of problems with leadership, a lot of problems just in Europe, you name it, there are problems. So the market doesn't have to be your problem unless you make it one. The market right now could be an opportunity if you let those problems don't affect your mindset and your psyche at your desk. And that's what we're just trying to do here. So it's Thursday, it's been a long week, go out for happy hour, have a good time, spend some time with your family, your friends, whoever it is that makes you smile, and tomorrow's another day. Scott Redler, T3 Live, the recap, see you at the morning call. Have a good night.